Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen. I'm chatting to Bill Rook from Redmayne Bentley. We're talking about charts, but not just about chart selections, about what goes into selecting those charts that you think are going to do well, those stocks that you think are going to perform. Bill, it's much more than just throwing a dart at a paper, isn't it?
Well, it can throw darts at the paper when you've got the market trending upwards. And that is the sort of, you can get a reasonable performance if the trend's your way. But what I've done today is sort of, I've done a retro scan on the 23rd of October 2006. I did a scan on the New York Stock Exchange shares and came up with, well, this one in particular, because this one is a winner. And I had 41 potential runners at that time. So the question I posed to myself, or rhetorically, is it possible just using technical analysis to pick the winners? So yes, it has picked one amongst 41, and what that instantly tells me is that you have to have a large pot or a largish pot to sort of spread those bits of money so that you might pick the share up. And this is just the first start of the story, really.
So what you're saying is you've got a low chance of if you were just going to buy one share, of picking that one winner. But if you spread your money around and have a good filtering process, the chance then of picking those winners becomes higher. So which one particularly are you talking about? Is it...
This is potash, Giles.
Potash.
Yeah, potash. Yeah. It's done extraordinarily well with the agricultural problems around the world and the demand for fertilizer. But this at the time may be known, maybe in the price. We maybe not know how much there's going to come through from the share. But the interesting thing here is its consistency. This is the one thing we talked about over and over again, is how consistent is your system at picking shares. And everyone can have a lucky dip moment to pick one out of 41 and hopefully get those 5 or 6 baggers that come through at the end. And this has gone up to about 200. We'll look at this chart over the weeks, I think, ahead, just to see how this evolves and whether as the share scales to new highs, whether the selection process would have scaled down, sort of say like 5 or 6 shares, and then it sort of becomes serious. But you won't actually get it on the ground floor necessarily. It will probably be a doubler or a trebler rather than a full 5 or 6 bagger the share gave the longer term investor, if you like.
What are you looking for then when you start selecting a share of this kind?
Well, first of all, I look for a new high, because then it shows that there's new money going into the share. And at the bottom of the chart there, I've looked at volume. I wanted to increase volume, the volume trend to be turning up. I want the trend of the share against its sector to be turning up, and which is the window above the chart, which it is. What I haven't included in there is the trend of the sector against the S&P. Well, it is there, but it's actually falling away. So that this is doing remarkably well in the sector which isn't performing well. And this is the essence of what I'm looking for there.
Does a sector that's not performing well put you off?
Well, it can do. It can do. I mean, if it's a filter, then you wouldn't have seen this one. So, and this might be just a speciality. This might just be one share that does the job. And we've had several this year. We've tried Traders, and I think there's one or two others like that around. ASOS, in the general retailing sector, which have performed extraordinarily well against the backdrop of a very bad sector. So it can do and it can't do. It depends how specialised this is. What I'm actually getting to there is, do we actually have to know more about the company, and therefore is technical analysis just a tool to add on rather than just a sole enterprise that you can use only for picking shares consistently? And I think you need both, actually. I think you need both to actually say, well, potash is special, and it is doing well. There's some good news flow perhaps coming through. Might be some good earnings forecasts coming through, and therefore it's a star by that company. And then when you do the Civ research search on the scan, if you like, you come up with 41, but you already highlighted the ones you think that are quite good. This is the problem of knowing or understanding what is quite good about this, what is so special about this share. Yes, it was in the top 10% quartile of all the best performing shares at the time, so it was in the top grade. But as I said, there are 41 other shares there. Why this one only? And I think it's too hard without other factors coming in to actually say this is the only share that's going to be it, and I'm going to put my money in this share. I think you need other filters coming in. But as the share goes up, I'll run the same scans again to see if the batch actually is lessened in the sort of in terms of performance wise. Because this is mainly looking at past performance and seeing how well these shares have performed over X number of days, if you like.
Okay, Bill, and so that's your process. It's interesting to hear you say that you need fundamental analysis too.
A little bit, yeah.
Because you don't often hear a chartist say that.
Well, I think it's I don't think you can do it otherwise. I don't think consistency-wise you can have lucky dips and pick a few shares and say this is quite good. This is. But I'm looking for consistency. I think where charts are very good on entry and exit. And I think if you had an eye on potash, this has been sideways since August, and now sort of August 05, and now running up to new highs. I'd be interested in the share if I thought the story was good behind it. So I think it's and it does depend on the quality of your research. I mean, if charts are that good, then I would assume that Warren Buffett would use them, and he doesn't. And looking at the best, he uses very, very good analysis, fundamental analysis, his own analysis and everything. If we haven't got that facility, you either coattail the man or appreciate what he's doing and find out what sources of information he's using in order to ascertain the grade of quality of the share you're looking at. So I think, yeah.
Okay, Bill. Now that's potash. Let's have a look at tallow, which is one I know you've been following for a while. Were you saying that it's the best performer in the FTSE 350?
Yes. Over the year, 63% outperformed the 350, and it's against the oil and gas sector. It's 36% outperformance against that sector. It's a fantastic performer, and blow me, it's done a 19% rise today. And would you expect that? You see, that well, you would, because look at the chart. The chart is good. In this particular case, the oil and gas sector is turning up. The relative strength I talked about earlier at the top of the chart there is above 90. That's very good. We've got a very strong trend building in the Q indicator. That's above 4.5. It's everything going for it, and a lovely consolidation, a break in a consolidation, highlighted by that little circle, and then suddenly a gap up to £9 plus on a special find today. So that's really good. And at the bottom there, the volume is good. The simplified VFI trend of volume is very good, and it is really a special share, a best performer performing even better.
Well done for spotting that, because I know we've talked about tallow for some time. I think we were talking about it on this program this time last year. So you've got.
Well, the arrows are there. I think actually look where the arrow is at the bottom there. Where last year was in May time, and there it is. The arrow is there, and that would be for the first of the 60-day new highs coming through there. It's not an easy chart necessarily along the way, but it's nice to grab some good profits on as it goes up.
Definitely. Now, you've also been quite a supporter of Brazil and the Brazilian market. And you're obviously not alone, because the Bovespa hit another record recently in the last couple of trading days. You're looking at the iShares here in Brazil. Do you still like it?
It's a lovely trend. I mean, this is easier. It's easier to pick a share which is trending upwards than one that's reversing, hoping you might get the reversal upwards. I mean, it's it's tempting because the gains can be quite spectacular if you buy something at the low and for it to pick up. And for an emerging market, this is rather special. The chart here, it's very good, very strong, and it's maintained that sort of path this year. I mean, it hasn't dropped their way like a lot of other markets have. The big green line across the chart is the 200-day moving average, and then I think it was tested early in sort of January time, and it was never sort of challenged that much, and it was sort of back on track very, very quickly. So it has that sort of essence of movement on the upside, and it's easier to see with a share trending upwards when it goes wrong. This is the key, really, because if you're buying a reversal and hopefully it's going to go up, how much tolerance are you going to give it when it goes down? Because you sort of bought it on the weakness, while you can give it. If you've got tight stops, it's okay. But I think there's a general tendency for people buying reversals to be a little more sort of forgiving, because they bought it when it was down, so they allow it to behave badly. So this is one of the ideas I like about momentum trading, is if you're rather strict with what you've got, and it might mean a bit more trading, but you're focused on winning shares like tallow, and Brazil certainly comes to the fore on this sort of basis.
And you mentioned it being May. Of course, the saying is "sell in May and go away." Is that something you subscribe to?
I'll look at the charts, and if the chart does suggest we're not in. But if it's quality, then I like to hold. If it's not quality and there's a chance to make money on another tallow situation brewing, then I'll be always willing to move to where the money's most appropriate to increase.
So you're not planning on going away anywhere just yet, then?
Not yet, no.
Bill Rook from Redmayne Bentley, thank you very much for joining us today.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.